So we're talking about why you really shouldn't be paying a whole lot of attention, particular, or trying to follow some of the advice that we see out there on some of these short clips on TikTok, Instagram, and the like. My name is Joel Garris. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest-running radio programs, also a top 25 podcasts in terms of financial planning podcasts. So make sure you check us out on your favorite podcast platform. Once there, subscribe, and then that way you'll get notification of when we upload new content. Any trouble finding our channel on any of those platforms, go to our website, Nelson Financial Planning, and there you'll see a bunch of icons. Click on one of them and it will get you immediately connected over to our channel. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning. Joining me on this week's program is one of our team members, Chet Cowhart, who's also a certified financial fiduciary. Chet recently interviewed a couple of weeks or so ago on television about this very topic. Let's pick up where we left off before the break. One of the issues that exists on these videos is just the sheer lack of regulation over the content that's on these videos.
Absolutely, yeah. I mean, tying back into the whole certified financial fiduciary topic, we're held accountable for bad advice, right? So if we give you any sort of financial advice, whether that be a specific product or something of that nature, we're held accountable if that's not in your best interest, if that's not suitable for your life. Whereas, of course, these videos on social media are not held accountable in any way.
Sheer incredible lack of accountability, and ultimately completely unregulated. I think about just the direct contrast that brings to our business, where every week, and just this past week, for example, I had a conversation with the folks at FINRA, the Financial Industry Regulatory Authority. We talked to them, and they talk to us on a regular basis, and that doesn't even count the countless emails and things like that we get that we have to do from a compliance perspective, the quarterly financial reports. I mean, the list goes on and on. And so when you think about throwing up a video, there's none of that level of regulation, and also it's relatively generic as well.
Absolutely, and I notice in these videos, in the description, there's always, this is not financial advice. I don't know if that's going to hold up in court or not, but I think they're trying to cover themselves. I would be scared if I watched a video giving you financial advice and then the description said, but this is not financial advice.
Well, yeah, that's funny because Chet, that's a comment that we make to a lot of people in terms of a lot of the disclaimers that are on your account statements, your investment account statements. Say that have that kind of disclaimer, where not licensed to provide tax advice and things like that. We often kind of, as a organization, we poke fun at that because we have a pretty significant tax department at Nelson Financial Planning, and so we always kind of poke fun at that because tax advice is so kind of important, and a lot of people hold it higher than kind of in investment or retirement planning advice. Certainly, all of those topics go hand in hand. That is for sure. And then the reality is that a lot of kind of the business model for social media is based upon the psychology of trying to kind of connect you in or loop you in.
Yeah, I mean, think about just how social media functions. The algorithm is going to feed you what it thinks you're going to like the most, as well as what it thinks you're going to engage with the most, provide more traffic to the platform. So just inherent confirmation bias kind of comes into that. Anything that you engage with, whether positively or negatively, you're going to see more of that. So, if there's a video on a particular product, whether you like it or not, that's just going to keep feeding you that. That's that same sort of video, and that's not good.
Right. Well, and the more you get told something, even if it's wrong, the more you start to believe it. I mean, that's the psychological phenomenon of confirmation bias, where you just keep getting into this endless loop of telling you these things, and if they're inaccurate, you can almost get to the point where you believe them.
Yeah, I mean, there's a certain feeling when you're watching a video online. It feels like that person speaking is coming from some point of authority in a way where that's oftentimes not true. But I think because it comes off as an educational video, you may believe that. And then start to believe that what they're saying is true, but they're just any random Joe Schmo in their bedroom. So
and this has becoming a bigger problem. Last week on the program, Christina joined us to talk about the IRS Dirty Dozen tax list, which is basically an annual list that the IRS puts out and been putting it out for 20 odd years, talking about sort of the top 12 scams involving your taxes, and social media is one of the ones that that's on that list that we've seen a lot of late.
Yeah, absolutely. There's some interesting tax scams going on right now. I can't believe some of it.
Certainly, what happens is that it really, there's always sort of that shred of legitimacy, right? I mean, anytime you're looking at anything out there online, there's always kind of that little bit of shred of legitimacy. Maybe they reference a tax form. Maybe they, talk about a particular tax strategy that is a legitimate strategy, but then it just sort of takes a right turn, if you will, and gets it used inappropriately. One of the bigger examples actually has to do with kind of how W-2s and those kinds of things work.
Yeah, there's one going around right now where they want you to use Form 8944. That's a waiver that tax professionals would use if you'd like to file via a paper file instead of online, and that way you can sort of fudge your W-2 in a way you either decrease your income, increase your withholding for the year, or both. And the people on social media are saying use that to get a bigger refund, which is that's tax fraud. So don't do that.
Yeah, that's tax fraud. You go to jail for that.
Right.
But yeah, it's funny because the Form 8944, legitimate form, okay, and in some cases, that form is mostly used by tax preparers when there can be certain circumstances where you can't electronically file a return, where you have to file a paper return, and when you file a paper return, of course, then that sort of changes the processing of that tax return by the IRS. Yeah. And then if you're simultaneously sort of printing off a W-2 or creating a W-2 and feeding that false information in, and then you follow it up then with that paper filing, then you might get lucky and have it processed, get the refund, because the processing is not very different for a paper return versus an electronic return.
Mm-hmm. Yeah, I mean, I'm seeing more and more stories every single day of the IRS saying they're gearing up for more audits than ever before. So I don't think, if there was ever a time to not do it, it's probably now.
Correct. That makes good sense. There's certainly a lot of crazy stuff going on out there, and when we think about how easy it is to perpetuate some of these frauds through some of these videos, certainly. You want to be very careful at watching and following the advice. Kristen tells a story, and this is a real life story, and I think you've heard her tell this story. Is that she met with somebody who followed advice, courtesy of a TikTok video, right, and involved converting your IRA over to a Roth, and then all of that money is tax free. Mm-hmm. The problem is, the video didn't talk about the fact that you got to pay the taxes in order to get to tax-free land.
Yeah, there's unfortunately no account where it's tax-deferred or tax-free going in and tax-free coming out.
Right. It becomes very hard to do that. So, and we've seen it, real-life examples. And that, I remember Kristen tells the story. That person was really just completely couldn't believe
Right.
that the advice that they had gotten online was wrong.
And now you're sitting in April and you owe a bunch of taxes.
Yeah,
Not fun.
Exactly right. Oh, goodness. Well, we're going to take a break and return after these messages. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. My name is Joel Garris. Joining me on this week's program is Chuck Cowart, also a certified financial fiduciary at Nelson Financial Planning. We'll be back after these messages. So certainly had a busy week last week at Nelson Financial Planning. If you were listening to last week's show, you know that we celebrated our 40th anniversary as a firm this past Wednesday on May 1, and certainly threw a nice little party on Wednesday to celebrate that.
Yeah, that was a lot of fun. It was really nice to see all the clients out and in one spot, as well as looking. I have not been here for 40 years, so
Right.
To see some of those older pictures and sort of how far we've come was really interesting for me, especially.
Well, Jamie did a great job on kind of going through the archives and pulling up some of the videos, way back when the firm was started by my father-in-law, Jack Nelson. He used to do a bunch of television ads, and it was fun to kind of go back through the archives and find some of those as well. And so we actually posted that. It's about a 5-minute video or so that she put together. So if you're interested, check it out. It's on our YouTube channel at Nelson Financial Planning, and there's some great memories in that clip.
Absolutely,
for sure.
Yeah, it's a lot of stuff I had never seen before.
Yeah, it was very good stuff. It's funny. We actually had one of the clients, as they were watching the video, come up to me on Wednesday during our little kind of celebratory cocktail hour, and she said, "Oh, my dad was in one of those ads that Jack did all those many years ago. You didn't happen to kind of stumble across that?" And so brought Jamie over to ask that question, and she said, "Yes, I do remember that one." And so we were able to pull up the video and send it off to her daughter, which was really cool.
Yeah, that's very interesting. One thing I had learned that I didn't know. I learned this at the event, was that 6477 in our last phone digits is NIPS,
right?
Which was the old the firm's old name. So
yes.
That was very interesting to me. I don't know how I'd never realized that. But
yeah,
that was cool.
That's funny. Yeah, we don't run that one because and I won't get too deep on this because it's a family program here on a Sunday morning. But the abbreviation NIPS means something different on the internet than it used to, or at least since the firm started 40 years ago. So that was one of the biggest reasons why, as we got more into social media, internet, things like that, where we felt it necessary to kind of shift the name to Nelson Financial Planning. And it's just a more general description of what it is that we do beyond just the investment planning. But yeah, the old NIPS, Nelson Investment Planning Services. Yeah, that's the 6477
right.
of the phone number. That's right. And certainly it's neat. I mean, obviously we have had such a real privilege to help so many people along life's journeys. It was neat to kind of see, how that has spanned across 2, 3, and sometimes even 4 generations of the families that we've been able to help. And it certainly makes our job, very, very special. One of the biggest reasons why I still certainly enjoy what I do. One of the areas where we certainly help people is the notion of, trying to help figure out life's big purchases. And I wanted to talk about this topic on this week's program chat, because I know if we think to the book that we wrote last year, Next Gen Dollars and Cents, one of the chapters was about life's big purchases, and that happens to be one of the chapters that you also did a lot of work on. Certainly the creation of that book was a team effort at Nelson Financial Planning. By the way, the book's still available on Amazon. If you're a Prime member, you can have it as quickly as tomorrow. But if you listen to the program, you know that there's a way to get it for free, and that is simply by calling the office, visiting our website, calling the office at 407-629-6477, NIPS, right? Or going to our website, Nelson Financial Planning. Schedule one of our free initial conversations, and when you do, you'll wind up, when you come on in for the conversation, you'll be able to get a copy of the book for free. So you don't have to pay Amazon's prices when you do that. But certainly that chapter talking about life's big purchases, Chat, was one that you worked on pretty extensively. Tell us some of the ways in which you're kind of, you've encountered helping people on acquiring some of those big purchases in their life.
Yeah, I mean, so with a lot of the younger clients I meet with, I think that's a top of mind topic is whether that's buying a house, buying a car. Those are both big purchases in your life that require a lot of thought and careful decision making, because doing it bad will cause you a lot of financial issues. So yeah, it's I think it's also top of mind more now than ever with interest rates where they are and home prices, especially here in the state of Florida. I know many other states are having sort of our same housing issues. So it's become a big topic. It's not as easy as it once was, where it was just, okay, we'll add a budget line and we'll throw some money in a savings account for a down payment. I think it's more nuanced than that now.
No, and I would agree with that. And that is a problem, particularly for that group of people in their 20s and 30s trying to buy that first house. And it's a real struggle. But there are some things that you can do to kind of prepare, and that's the guidance that you're giving the folks along the way. So what's on that list?
Yeah, I mean, first of all, you want to absolutely save up for that down payment. That's still, that's still a big part of it, is creating that budget line, having that down payment for a multitude of reasons. Ideally, 20%, so you can avoid that mortgage insurance. That's going to be a hefty charge, oftentimes, $100, $200, $300 a month extra on your mortgage, and that's not doing anything for you. You're not building equity with that money. It is just sort of insuring the lender.
Right. So. Right. Yeah. No, it doesn't do you any good at all. And then the other thing I know that we do a lot of, and that you do a lot of, is that we help people in that qualification process. And boy, the qualification for any kind of a mortgage or home equity line and all that, I mean, it's almost to the point where they're asking for your blood type almost.
Yeah. No, I mean, I do a lot of that in my day to day. A lot of our clients are, whether you're refinancing or you're buying your first home or another home, the banks require a lot. So we oftentimes have to write a letter sort of certifying that they have a certain amount of assets, or that we can provide them income for X amount of years in order to pay that mortgage. The banks are sort of just looking for security in their loan, but it's definitely getting harder and harder to qualify. So I'm doing more of those.
Yeah, I would imagine. We had an interesting story this past week as well. I don't think you were in on that conversation, but yeah, I mean, they had gotten turned down for an increase in their home equity line because they couldn't prove that the income coming out of the retirement account was regular and systematic. So we're using one of our letters now to kind of help them get qualified for that loan. But yeah, it's certainly a very different process. When we think about a home purchase and particularly a home mortgage, Chet, you mentioned higher interest rates. There's a lot of things that people need to realize and think about as they start to look at that mortgage. In terms of kind of what that kind of boils down to for people.
Yeah, I mean, with interest rates where they are, your mortgage is going to be hundreds, if not thousands, more expensive per month than it would have been a couple of years ago. I know my parents, for example, refinanced around the COVID time when rates were extremely low, and they're both self-employed, so that process is really painful if you're all 1099 and of that nature. But yeah, interest rate is a big thing to think about. You're going to want to shop around for that. That's going to make probably the biggest difference in your month-to-month payment, as well as the overall cost of the loan. I mean, if you stretch out, if you look at a mortgage at 7% over 30 years, that's $100,000 or more in interest, depending on the cost of the house.
Right? No, absolutely. Well, we're going to take a break. When we come back, we're going to talk about kind of what that decision, and if you're in that home buying market, kind of boils down to, and ultimately kind of talk about the components of a mortgage, the things that you need to be thinking about in terms of getting that right mortgage. So we'll cover all of that when we return here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. This is Joel Garris with Chet Howard of Nelson Investment Planning Services. We'll be back after these messages.